reclassification of dividends to salary doesn't work. Let's have a look at the story of Mr. and Mrs. Jones versus HMRC and the tax tribunal in 2014. They had a company. It went into creditors voluntary, which is insolvent liquidation, in 2009. They had a standard procedure in terms of taking money out of the company to live on, presumably, of largely doing it by way of a small salary and the balance in dividends. And what happened was, in 2008, they had continued that procedure, drawing interim dividends during the course of the year. However, as the company was going towards liquidation, they decided to change things slightly, whereby they would change or reclassify the monies that they'd received by way of dividends and refer to them as salary. And the rationale behind this was there was concerns about whether or not the liquidator would then be treating those dividends as unlawful dividends. And what happened was they actually, on their own personal tax returns for the relevant period, they classified the monies that they received as salary. Now, what was interesting was, although the monies that they received was held by the tax tribunal to be dividends, before that, the effect of declaring all this money as salary on the 2008 draft accounts that was put to the creditors at the creditors meeting in February 2009. The effect of this was that this no doubt sparked something within HMRC to imagine that there was outstanding payments due in respect of PAYE national insurance. And they, as a result, pursued Mr. and Mrs. Jones in respect to the PAYE national insurance. Now, fortunately for Mr. and Mrs. Jones, the tax tribunal took a good look at this, and they decided that the monies that they'd received have always been dividends, and therefore HMRC lost. The taxpayers succeeded in respect to their appeal, and ultimately they didn't have to pay all this PAYE and so on that was going to be assessed on them. But despite the fact that the taxpayer won and HMRC lost, it shows that, number one, it's not a clever idea, and it often doesn't work, as it didn't happen in this case, to reclassify the means by which a director or a shareholder, but particularly in this case a director, receives monies from a company. In this case it was an owner-managed company, so the directors were the shareholders. Reclassify them as something that they weren't. If they've already been treated as dividends, you cannot then treat them as salary. But if you do dare to do so, don't be surprised if HMRC wonders, well, hang on a second, if this is now salary, surely we should be getting PAYE national insurance. Even though the taxpayer won, there would have been no doubt stress and concern associated with the whole issue of having to defend themselves in the tax tribunal. So don't attempt to recreate history when you don't need to. Question, queries, concern, give us a shout. We know Insolvency inside out.